Good day Forex trader. Your USD Forex signal, range-bound with low volume volatility. The pair will likely remain in a tight range today as the low volume environment continues. Bearish view. Sell the Euro USD and set a take profit at 1.1250. Add a stop loss at 1.1400. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1330 and a take profit at 1.1400. Add a stop loss at 1.1250. The Euro USD pair is in a tight range in a low volume trading environment. It is trading at 1.1310, which is a few points below last week's high of 1.1342. Low volume environment. Last week, we experienced a relatively low volume environment as most investors took their Christmas holiday breaks. This situation will be worse this week as investors wait for the upcoming year. The biggest driver of the market these days is the Omicron variant. Recent data showed that the number of Omicron cases in the US and Europe has jumped sharply in the past few weeks. In the US, Omicron cases represent more than 73% of all COVID cases in the country. The same trend is happening in most European countries. At the same time, it is emerging that the new variant is relatively mild than the previous variants. Indeed, a closer look at data shows that the variant is relatively mild and the number of deaths has dropped substantially in the past few weeks. Therefore, there is a likelihood that the impact of the variant to the economy will be significantly low in the coming weeks. Besides, more countries will not have the need for lockdowns. As such, the Federal Reserve and the European Central Bank, ECB, are expected to continue unwinding their monetary policy conditions in the coming year. The Fed has already hinted that it will end the quantitative easing, QE, program in March next year. It will then start a rate hike cycle as it has hinted to implement about 3 hikes next year. The ECB, on the other hand, has already started unwinding its quantitative easing program. It will end it in the first half of the year and then stay patient before hiking rates. Today, there will be no major economic data from the US and the European Union. Euro USD Forecast. The 4-hour chart shows that the Euro USD pair has formed a horizontal channel in the past few weeks. The pair remains between the key support and resistance levels at 1.1235 and 1.1360. This price is about 7% below the highest level this year. A closer look shows that it has formed a small double top pattern at about 1.1343. The chin of this pattern is at 1.1290. It has moved to the 25-day and 50-day moving averages while the RSI is tilting lower. Therefore, the pair will likely remain in a tight range today as the low volume environment continues. If this happens, the next key level to watch will be at 1.1280. Gbp Usd Forex signal, extremely bullish for now. There is a likelihood that the pair will keep rising as bulls target the key resistance at 1.3500. Bullish view. Buy the Gbp USD pair and add a take profit at 1.3500. Add a stop loss at 1.3300. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3350 and a take profit at 1.3300. Add a stop loss at 1.3400. The Gbp USD price has been in a tight range in the past few days as investors focus on the ongoing Omicron pandemic. The pair is trading at 1.3393, which is a few pips below last week's high of 1.3435. Omicron risks ease. The Gbp USD pair has been in a bullish trend as investors price in a more hawkish Bank of England, BO, as the number of COVID-19 cases rise in the UK. Recent data from the UK and the US show that the number of new infections is rapidly rising. For example, the US recorded more than 200,000 cases on Christmas Day. The UK has also been recording a strong increase in the number of COVID-19 cases. However, on a positive sign, the number of deaths has increased just slightly. This is in line with recent reports from South Africa and the UK. Two reports published this month showed that the Omicron variant is relatively less fatal than the other variants. Its symptoms are also significantly mild than those of the other variants. Therefore, the Gbp Usd has risen because investors expect that the Bank of England, BO, will be more hawkish than the Federal Reserve in the coming months. The bank has already become the first central bank in the G7 to hike interest rates. The Fed has hinted that rate hikes will start in the coming year. Activity in the Gbp Usd will be relatively muted later today as most investors stay away from the market. That's because most of them have taken the Christmas holidays as they prepare for the upcoming year. Still, the low-volume environment could lead to more volatility in the pair. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd has been in a bullish trend in the past few days. The pair has rallied from a monthly low of 1.3160 to 1.3435. On the 4-hour chart, the pair has moved above the 25-day and 50-day moving averages. It has also risen above the 38.2% Fibonacci retracement level. Also, the pair has moved above the upper side of the cup and handle pattern at 1.3376 and formed a small bullish flag pattern. Therefore, there is a likelihood that the pair will keep rising as bulls target the key resistance at 1.3500. This view will be invalidated if the price drops below 1.3340. Aud USD Forex signal, rebound to 0.7300 likely. The pair will likely remain in a tight range today because of low volume. Bullish view. Set a buy stop at 0.7245 and a take profit at 0.7300. Add a stop loss at 0.7200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7200 and a take profit at 0.7150. Add a stop loss at 0.7250. The AUD USD pair is hovering near its highest level since November 24 as investors reflect on last week's strong data from the US and the rising number of COVID cases in China and Australia. It is trading at 0.7225, which is slightly below last week's high of 0.7250. COVID cases in focus. The AUD USD pair experienced low volumes last week and the trend is expected to continue this week. Besides, most retail and institutional investors are likely taking this week off as they prepare for the new year. With no major economic data expected, focus will remain on the ongoing trends in COVID-19 cases. Recent data shows that the number of COVID cases is rising in the United States and Australia. In the US, the number of new cases on Christmas Day was more than 205,000. The same trend is continuing in Australia. For example, the number of cases in New South Wales jumped to a record high during the weekend. Still, the number of hospitalizations and deaths has been relatively low. This trend confirms last week's reports that revealed that the Omicron variant was relatively milder than the other variants. Therefore, these numbers hint that the Reserve Bank of Australia, RBA, and the Federal Reserve will maintain a relatively hawkish sentiment in the coming year. Besides, we don't expect that the two countries will implement more lockdowns. The AUD USD will have little action today. For one, Australia will be in holiday while most American traders will continue the Christmas mood. Still, this little volume environment could lead to significant volatility. Aud USD Forecast. The AUD USD pair has been in a bullish trend in the past few weeks. It has managed to move from a low of 0.7000 in the first week of December to 0.7250. This was a 3.3% increase. On the 4-hour chart, the pair has approached the 50% Fibonacci retracement level. It has moved above the 25-day and 50-day moving averages. The current level is important since it was its highest level on December 16. It is also along the upper chin of the double bottom pattern. Therefore, the pair will likely remain in a tight range today because of low volume. Still, the overall trend is bullish, with the next key level to watch being at 0.7300.